Hello, this is Joe Pryor of the virtual real estate team.com in Oklahoma City, a part of Redbud Realty and Associates. Today is the next to the last in the I.N.V.E.S.T series. We are now on the letter S, and S is going to stand for savings. Now, what does savings have to do with real estate investment? It's very simple. We go for positive cash flow. That is what we've always gone for in the Oklahoma City market. We never were one of those people about negative cash flow, and back in the days when markets were going up 25%, we just didn't buy that, and Oklahoma was not that kind of a market. So what we've been for a long, long time is a market where low prices of homes, solid rental market, low taxes and insurance. And so because of that particular reason, we have positive cash flow. And let me give you an example of what savings means. Because you're going to do something with that positive cash flow, aren't you? You're not just going to put it under the mattress. So I've got an investor buying their first properties in Oklahoma City. Now they're buying 3 duplexes that are together that are a short sale. And in this particular case, one of the reasons we started with this is because they're 100% rented and the cash flow is just outrageously good. So get this, in the first year with a 20% down loan, it should yield about a gross income of $29,000 after we pay all mortgage expenses. That's a lot of money. Now, we're always going to have a reserve, of course, for if something goes wrong on the properties, because as a landlord, that's your responsibility. But let's even say that we set back $4,000. There's now $25,000 in positive cash flow. And what we want to do is make sure that every dollar that we have coming in on an investment works for you, because this is going to increase the internal rate of return, because you're going to sell possibly at some point and you're going to make a profit. There's going to be appreciation. There's going to be money that you've made during the life of the investment. But also there's going to be the money that we take, that $25,000 for this particular example. And what we're going to do is we're not just going to stick it in a checking account, or as I said, under the mattress. We're going to put it in some type of interest-bearing account. Now, my recommendation is a conservative one. I know that doesn't shock you, because that's the way we go about real estate here and real estate investing in Oklahoma City. So what we're going to do is, even if it's 2% on your money, that is an extra 2% that goes on top of that $25,000. So what happens with that money? What are we doing? Well, for one thing, that savings could be simply a nest egg. It could be something where after a couple of years of this, let's say 2 or 3 years, $50,000, $75,000 in 3 years is a lot of money. So what we can do at that point is maybe we go with a little bit of a higher risk investment of 5 or 6% on some of it. And that's still not a huge risk. It's not like, doing something that, you don't know if it's going to go up 25% or down 25%. Or another way that we can go about saving this money is getting an even better yield. That's a safe investment. Now get this, let's say that we have $50,000 in the first 2 years. Well, if we're going to make 2% on our money, or even 6% on our money, why not go ahead and make something on the order of 18 or 22 or 24% on our money and still have a safe investment? And what would that be? That would be taking part of our profit and buying another property. So we can take that $50,000, we can buy a good property at an equitable price, something with equity built in, like a short sale or a foreclosure. We can take 20% down, pay our closing cost, and maybe 1 or 2 properties for that matter, and again, get that yield. So instead of $25,000, maybe we're talking about $40,000 a year now, or $50,000 a year, if we make the right investment. So you can see how your money works for you. Because what we want to do is we want to save every dollar, we want to maximize every dollar. And remember, you can put it in a bank, in a CD, you can put it into a annuity program, a tax-deferred annuity. But at the same time, if real estate has been really, really good to you, if you've made this money on these duplexes, then what you're going to do is possibly buy 1 to 2 more with that money for a higher yield, but still a safe, conservative investment in Oklahoma with positive cash flow. So we want to maximize your dollars. We want you to keep buying property so that at some point down the road, you're totally comfortable You have no worries, you can sleep at night, and I know money doesn't buy happiness, but it sure helps. This is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.